This is going to sound very accountancy. Whatever your income is minus your expenses equals your profit. Common areas I would say that we miss out on quite a lot can be simple things like mobile phones, gym access actually sometimes, which people are going to find quite surprising. Like any industry, we have multitudes of apps out there that will help you with accounting behind this. You should be looking towards software. Okay, nowadays software's everywhere. AI has exploded and there's softwares popping up everywhere.
Hello again, and in today's video we're going to be talking about tax deductions for content creators, influencers and YouTubers. So the reason you want to listen to this one is to find out what you can do to reduce your tax bill by the expenses that you incur, because there are some expenses that you can claim and others that you can't. So if you know which expenses you can claim for your content creation business, then you can reduce the amount of tax you pay and keep more of what you earn. And today I have with me again my colleague Brendan. Hey there, Brendan. How you doing?
Hi everyone.
So Brendan, today we're talking about tax deductions for content creators. So let's kick off with the general rule for expenses. Do you want to talk about that in generality, and then we'll go into the specifics of the individual different types of expenses that apply to our audience of content creators and influencers?
Okay, so the generally accepted term across internationally actually is that something should always be wholly and exclusively for business use. So whenever you're looking at any of your expenses, you're looking at for anything that is wholly and exclusively for business use.
Absolutely. Yeah, spot on there. The kind of the tax terminology, wholly and exclusively for the purposes of the trade, is an allowable expense. Okay, so I guess the most common ones that would stand out for our content creator would be things like...
So I see a lot. Of course, the common things are equipment. Okay, you'll see whether it's cameras, mics, anything really that goes into production. Actually, people undervalue the amount it costs to get all of this equipment to be able to run the whether it's YouTube channels, Instagram, whatever you focus on. But the common areas I would say that we miss out on quite a lot can be simple things like mobile phones. Mobile phones, let's be honest, will run the majority of your social media presence. Yet a lot of people don't claim towards them. Okay, and it's the method in which you set up to be able to claim them, whether that's getting a business contract rather than a personal contract for your phone. It just allows you to then be able to claim a large proportion of that phone use, because let's be honest, that's probably is the majority of what you're using. So the other couple of common ones that I see come up quite a lot, it could be gym access actually sometimes, which people are going to find quite surprising, because they're going to say, no way, you can't claim gyms, it's not allowable. But you can't claim monthly memberships. If you're claiming day passes to then go and make content, or you're claiming it can be day classes just so that you can go and film for your digital courses or your fitness platforms or that side of things, then you can claim that. That is business. You have only gone there for business purposes. You haven't gone there personally. So there's no dual expense.
Duality of benefit.
yes, getting a bit tongue-tied.
Yeah, no, and that's a good creative hack around it, I guess. So your general gym membership, if you're paying it monthly out of your personal pocket, there is going to be some personal benefit there. Whereas if you're taking a day pass and your intention is to go and create some content, but incidentally you might do a little bit of workout after you've created your content, then that's fine. So if you're a content creator in the fitness space, then that might be a different way to structure how you pay for your gym to get that tax relief back on your gym expenses. So that's a great one you've picked up there. The equipment is obviously a pretty obvious one. So anything that is actually used in the production of your content, not just the equipment, but then we go on to once you've recorded it. So your cameras, your laptop, your mic, your tripod, your lights, all that kind of stuff you put through the business as an expense. Just to briefly talk about what is the benefit of doing that. So we talk about this day in, day out. So for us, it's second nature that expenses are good. But how does that actually translate to a benefit for the creator? So if we can just talk about the actual maths and how it works to help our audience understand.
So the tax itself is generated based on profits in a business. Okay, this is going to sound very accountancy, but to break it down, whatever your income is minus your expenses equals your profit. Okay, there is a lot of in-betweens in between that, but that's simplistic. That's how we essentially work out what tax is due. So what you want to do is essentially put through more expenses, which drives down the profit, and by driving down the profit, that then drives down your tax, which means more money essentially that can go towards other things in the business.
Absolutely. No, spot on there. And I guess the value of the expense will depend upon how you are structured. So if you're a sole trader, and the way I look at it is if you're a sole trader and you are a high rate taxpayer, that means that you are paying tax on your profit at the highest rate of 40%, which means that any additional expense you can find is going to save you 40% of that expense in your tax bill. So the way I look at it, being a high rate taxpayer, I think, well, for me making a buying decision, if I go and buy the latest iPhone, I look at the price first of all, and I see if the price is £1,000, and that includes VAT. For a start, I can recover that VAT because I'm a business. Yeah. That means the net cost to me is just over £800. But actually, I can put that through as a business expense. Now, I'm set up as a company, so my corporation tax rate is around about 25%. So that means I can take off another 25% off that £800. So the net cost of that iPhone to me is actually £600. So when I look at anything I buy, if it's for business use, then I can knock off the VAT and I can knock off the tax relief. And then for me, it's a buying decision around, shall I buy a new iPhone for £600 as opposed to £1,000? So, that's a way that you can look at spending or buying equipment or anything that is going to be for a business benefit. And just kind of carrying on that trend, so not just the equipment but also editing. So if you're using freelancers across the world to perhaps edit your videos for you or help you with the scripting, all that is an allowable expense as well, right?
It certainly is, yes. So anything that you essentially hold in exclusively, I'll say it again, but put into the content. So it can be editors, photographers, it can be, the list goes on, unfortunately, at the amount of cost you've got to pay to make the content, but all of those are claimable through the business. The other common things that I see come up quite a lot is travel. Okay, travel is one of these which is very difficult for a lot of accountants to kind of match up against the traditional rules, because the idea that a content creator does have to go and get content in certain countries, they do have to go to photo shoots, they have to travel quite a lot in some cases. So it's being able to, can we claim that? And in a lot of cases you can. And what we see a lot is people say, no, you can't claim that. HMRC will say there's too much personal use, you can't claim that. But you can. The idea is, if you're going there predominantly for business purposes and you're only going there or you're going there mainly just to film and that side of things, there might be some incidental, as you said earlier, personal use, but the idea is you're going there for business, then that is claimable and it is allowable. And I see that a lot from new clients that come on board with us, is that the accountants have already told them, no, you have to proportion it by days. It was personal against business. No, if there's a large element of that, and if not all of it was business related, that you went there for that purpose, and it is claimable.
Absolutely. And that can make a big difference in terms of being able to claim your travel costs to the airport, and then your flight costs and your accommodation, and then you can claim actually day rate allowances when you're out there and things like that. So that can make a big difference to getting your tax bill down for stuff that you're doing for business purposes. So moving on now, another area which is also quite contentious and we get questions a lot. Can I claim for my my coffee or my lunches if I am going to work in a coffee shop, for example? Can I claim for stuff like that?
I think you've got to look at the reasoning behind why you're claiming for these costs. Okay, you can't claim if you're just going down the road for a coffee and coming back. You can't claim that. Okay, look at it as a normal employee circumstance. I can't claim it as part of capture. And the reason why I can't claim that is because there's no inconvenience element to it. HMRC allow you to claim travel and subsistence because it's on a temporary basis. So what I mean by that is, if you're sent to travel, I'm in Portsmouth at the moment, if I get sent all the way to Manchester and I have to go and film or I have to go and do that, of course I can claim any travel and subsistence that's related to that. It's not my current workspace. It's not my current work area. I'm going to a temporary location to be able to do that predominantly for business use. So you can't claim if it's you just commuting, or as you just, if I'm just popping down to the local Starbucks, I can't claim that. But you can claim if you're going and you're forced to go to other locations because of business purposes.
Absolutely. So as an example, if you're a creator and you've been invited to, say you live in Southampton near where we do, and you've invited to record a podcast in London. I did this a couple of weeks ago. I'm going to London for the day. It's outside of my normal commuting area, it's outside of my normal home location. And therefore, when I'm going to London for the day, it's for business purposes, it's to record content, and therefore my expenses of that day of traveling and of subsistence, so any coffees I might have on the way there, my lunch there, all that is an allowed expense, right?
It certainly is, yeah.
Is there any limits to that, or is it just based upon receipts?
Of course, there's limits, okay? And I get this question a lot as well. And some creators will say to me, they've had to go to this 5-star, experience that's there. Unfortunately, you've got to look at this as it is you substituting your day-to-day. Okay, so you can't just go to a 5-star hotel in London and spend £500 on a meal and say, oh, okay, that was a necessity for business. It's not. You're getting an experience as part of that. But what you can do is if you're going to essentially just buy your lunch, or you're even if it's going into a restaurant, but it's not excessive amounts, it's just you replacing your day-to-day subsistence at home, then of course, you can claim that for the business.
Yeah. So anything reasonable is fine, and you must see a fine with that. Okay, so we've gone through a fair few of the kind of the general expenses that you can claim, the more specific ones, the ones that are overlooked perhaps by other accountants, things like travel, subsistence, things like that. Are there any others, do you think, that we haven't covered yet?
Not that I can think of specifically.
Okay. No, that's fine. So lastly then, to ensure that we make the most and ensure that we're capturing all of these deductions along the way and actually get the benefit of them, because it can be very easy to incur these expenses, but if I'm incurring them personally, and then by the time I get around to do my tax return or my VAT return, then they're kind of forgotten about. What would you suggest as an efficient way of recording expenses to make sure that everything that can be claimed for business purposes is claimed? So some tips on record keeping, as it were.
Okay, so like any industry, we have multitudes of apps out there that will help you with accounting behind this. Okay, you should be looking towards software. Okay, nowadays software's everywhere. AI has exploded and there's softwares popping up everywhere. But the main ones that I would focus on are some photo capturing apps to at least be able to get your receipts into one place. If you're not going to do your proper accounting through Xero or QuickBooks or these platforms that's able to actually reconcile a bank, then simplify it. Get an app like Dex, HubDoc, Apron, all of these apps at the moment that you can take a picture on your phone, it will store the receipt, or you can have an email address where you just forward that email constantly to that email address, it will store it all on there. The importance of this is by having it in one place, one, you don't forget about a year end. The amount of clients that come to me and say, oh, I don't know what expenses I had 9 months ago, don't get to that stage. Do it on a monthly basis, at least, if not a weekly, where you're storing your receipts into this system so that you've got a log of all of them, and then you're never going to miss out. Okay. And it is very, very simple. You can either forward to an email address, as I said, upload it just on a web app, and you can have an app on your phone, or you can go down the routes of taking a paper copy nowadays, which is very rare, but you can still take photos of the paper copies.
Yeah, absolutely. And if this sounds all still too much of a faff, then this is what we do for clients, right? We help you to set up on software, we connect the receipt capture apps up, and then just tell you what to do, give you the app, give you the instructions, and all you then need to do is pretty much take a photo, and then we do the rest, because the software tools enable us to do this. So the record keeping is important. And the other thing worth noting is that having a separate bank account as well. So if you're operating as a sole trader, have a separate account for your business, so then it's not a nightmare trying to deduce from your personal bank account what was business, what was personal. It's much easier if you keep everything in the same pot. So your income goes into that pot, and then if you're incurring a business expense, then do it from the account, the business card that you have with that account. It makes record keeping so much more easier, and more likely that you're going to capture all the business related expenses that you incur if you have that kind of segregation between personal and business account. Fantastic. Well, Brendan, that's been really useful. Thank you very much today for sharing that with the audience. Hope you found value from it, and now know what you can do to keep more of what you earn. As always, if you would like our help with managing your finances, making sure that you claim all the expenses that you can to keep your tax bill down as much as possible and keep more of what you earn, then feel free to click a link on the link below and get in touch with us. We'll be happy to have a chat with you and see how we can help. Take care, and I'll see you on the next video.